What's up, guys? I'm Dave, the founder of the Military Millionaire community, and today I want to talk to you about 8 ways to qualify for a VA loan without income, and then the 2 that don't. One of the most common questions I receive from transitioning service members is how to qualify for a VA loan without income, because your income will end as you're exiting the service. For example, if you're getting out of the military in 6 months, your lender's not going to be able to use the income for the military service income to qualify you for the mortgage. Puts you in kind of a weird spot, because if you were planning to buy a home as soon as you move back to your home of record after exiting the military, you know, it might not be as convenient as you want. So this video has been a long time coming, and I have no idea why I didn't record it sooner, but now I have more information. I want to help you guys out, and I want to give this all to you, right? So now I hope this video helps give you some ideas, but just know going forward that the answer isn't as simple as you would hope. Now, do me a favor real quickly. Before we dig into this, please smash the like button, right? This is a video that could help you qualify for a home and literally make you hundreds of thousands of dollars. Now, clicking that little like button is all I ask for in return, because it will tell YouTube that this video is worth putting in front of other service members to watch, which helps reach more people, which helps get the information out, because this is a common question that I get and a common question that a lot of VA lenders get, and I really want to help you guys understand and make the right decisions here. So the first is VA disability income. Now, I listed this one first because it's common these days for service members to receive disability income. So did you know, and you probably didn't, but if you didn't, VA disability income actually counts as 1.25 times the amount you receive when factoring for debt to income ratios, right? So just to make sure that this is clear, that's right. If you earned $1,000 a month in disability income, your lender will actually count it as $1,250 a month. Now, the reason is that your disability income is tax exempt, and so they count it as what the equivalent pre-tax ordinary earned income would need to be in order to net your disability income amount, right? Now, I've seen veterans qualify for mortgages based solely off of their VA disability income, including a $400,000 and some change home in Texas, I believe, with a veteran who was 100% disabled. So totally possible. Number 2 is retirement or IRA distributions. This one's fairly straightforward, although I don't believe it'll apply to the bulk of our younger audience. If you receive a pension or distributions from your IRA or 401k or other retirement vessel, that can count as income that you can use towards qualifying for your loan as well. Number 3, spouse income. So this is another one of those obvious answers, but people don't always realize that you can utilize it. Your wife or husband has a job. You can use their income toward qualifying for the loan. For example, my wife is a high school counselor, and she has been for the last 2 years. Actually, she has like 13 years experience, but at this specific school. When I exit the military, I could utilize her income to improve my debt to income ratio when qualifying for a VA loan. So as long as we qualify with her income and not mine, then none of the rest of this matters. So that's one advantage of if you wanted to like send your spouse back home to get a job prior to exiting the military, they would have that record of income. Although I have done this and just about the last 2 years of my time on active duty, and I don't recommend it for a quality of life standpoint. So financially, logistically, like it kind of makes sense, but from a quality of life standpoint, not ideal. Miss my family, so you know. Number 4, so one that I get asked a lot about, but get a job offer letter. So if you have an official job offer letter to begin employment with a company upon exiting the military, you can use that income towards qualifying for the VA loan. This will show continuity between your current income and the income you will be receiving upon exiting the military. This letter needs to be official, show the salary you'll be receiving, the date you'll be starting employment, location of the job, and any other pertinent information regarding your situation. Anything that isn't regular W-2 income cannot count towards that income. That means you can include your salary or hourly wage from this job offer, but not anything commission-based or related to bonuses you may receive, because that's not guaranteed. Please note that you're going to want to talk with your lender to clarify exactly what they want to see in this letter and ensure that your employer is legit. The last thing you want to do is use income from a job that you aren't actually going to be working and then wind up getting foreclosed on because you can't afford to make your mortgage payments. Number, I think we're on 5 or 6, I've lost track. 75% of your gross rental income. Now, this is one of the reasons that I love house hacking so much. Let's say that Jimmy buys a fourplex and the market rent is $1,000 per each of the units in the house, the house that he's buying, right? Now, because Jimmy plans to live in one unit and rent the other 3 out to tenants, he can use 75% of the $3,000 that those units can reasonably be expected to rent for towards his mortgage payment. In this specific scenario, Jimmy can count $2,250 worth of the rental income, 75% of $3,000, towards his debt to income ratio. Now, the catch here is that this $2,250 only counts towards the mortgage payment. Any of this rental income that is left over after being used towards his proposed mortgage payment will not count towards debt to income ratio. It'll just kind of disappear. So just to clarify that, it counts towards your principal, interest, taxes, insurance, PITI, not just the mortgage payment itself, but your PITI. So, you know, it's very useful, but just keep that in mind. The next, maybe 8, Cosign, 12.5% down. Contrary to popular belief, you can partner with a non-veteran or non-spouse to use the VA loan. The downside is that the other person will need to bring 12.5% down to the closing table. That being said, 12.5% down is still better than 20% down, so this could be worth their time. Although personally, I wouldn't pay 12.5% down for a primary residence when there are other options like the FHA loan or even a 5% down conventional loan, which is less for owner-occupied, right? So those are probably better options. The only real situation I see this making sense in is if your partner has the 12.5%, but not very good credit or other reasons that wouldn't be able to qualify for the loan on their own. The caveat here is that I don't know if I would want to partner on a home with somebody who wouldn't be able to buy the home on their own for financial reasons, right? So, you know, that's still an option nonetheless. Now, the last option, I think this is the last option, if I remember correctly, that I put on here. I think we're on 8 now. Partner with another veteran. Now, you most likely put 2 and 2 together when I mentioned partnering with a non-veteran, but yes, you can partner with another veteran as well. I have a couple of friends who have done this, and one set that did it specifically for this reason. One of them makes a lot of money, but it's in a new job and didn't show the income on the tax return yet, and since it was commission-based, it has to be on the tax return. The other had a tax return to back up their income, and so they collaborated to purchase a badass triplex in San Diego. Now, there are several situations in which it would make sense to purchase a property together, but the most common 2 I have seen is when one member cannot show income required to purchase, or they want to combine their income in order to qualify for a larger property. Again, remember, tax returns need to show income. So in order to crush the income requirement, the best thing you can do is have tax returns for the last year or 2 showing your income. One of the things a lot of service members do is try to get as close to 0 on their taxes, and this is not just service members, this is everyone, especially like real estate investors. And while it's great from the standpoint of paying taxes, it does nothing to help you when qualifying for a loan. So if you're self-employed or like a real estate investor and you're showing almost no income for taxing, it's gonna bite you when you try to qualify for this loan. So let's say you brought in $80,000 in rental income last year, right? After all the expenses, you showed a net cash flow of $1,000. Then you're only going to be able to use $1,000 towards helping you qualify for the loan you're applying for. While you want to save money on taxes, just make sure you do it in a way where you still show enough income to qualify for a loan if you need it, right? It's kind of a delicate balance. Now, for this reason, it is sometimes best to bite the bullet and show some taxable income in order to showcase that your business is actually making money. That might be painful from a standpoint of paying taxes. It can be quite beneficial for qualifying for a loan. So you've got to kind of weigh pros and cons there. Now, I want to touch on some brutal truths about ways to qualify for a VA loan real quick when you don't have income, right? The reality is that you may not be able to qualify for a loan at the time that you transition from the military. Now, while that isn't what you want to hear, it's further proof that you need to plan ahead and get your ducks in a row before exiting the military. There are several income streams that I get asked about all the time, and I do mean all the time, which simply do not count towards your income. I want to make sure I outline these right now for 2 reasons. First, because people just don't know, and I feel the need to put this information out there in order to help you and be a valid resource for you and your family and to reference. And secondly, because let's be honest, I'm really sick of having to explain this all the time. Like, I can only send the same type of text a million times, and I can only save so many text formats, and So now I can point someone to a video that'll actually answer the question better than I would be able to in a short text anyway, right? So the GI Bill, no. About sums it up. I don't care what your mama told you or what the school you go to or how much the basic allowance for housing is for the GI Bill. Your BAH from the GI Bill does not count towards your income at all. The reason's simple, right? Income is guaranteed to disappear in the near future. Why would a bank give you a 30-year loan based on income that won't even last 1/6 of that time? Because at the end of your GI Bill, no more of that income, right? So hopefully that explanation makes sense, because there's no world in which you can use the income from your GI Bill or the BH related to your GI Bill at all that it can be used to qualify for a loan. Sorry, not sorry, just the way it is. Yes, it would be nice if it could, but it can't. Sorry. So side note, in case you can't tell, this is the #1 question I get about income used to qualify for the VA loan. And people genuinely try to debate me about this, about why this shouldn't be the case, as though I have some power to change the banking industry's perception of risk. Just no, can't use your GI Bill income, sorry. Side hustles. Side hustles are another very common income stream that people ask about. And as much as it pains me to say this, you unfortunately cannot start driving for Uber today, make $200, extrapolate that out to show that it would be $73,000 a year at that rate, and qualify for a loan. And don't get me wrong, these side hustle jobs, the income can count toward qualifying income, only if you have tax returns that back up how much you are making earning this way. Many people hide their side hustle income or bounce from side hustle to side hustle to side hustle, and unfortunately, in either of these situations, you're just out of luck. Now, what you can do to take advantage of the side hustle income is utilize it aggressively to pay down your consumer debts. That's going to improve your debt to income ratio and can help your other income streams stretch a little further for qualifying for a loan. So yeah, I think that's simple, right? If you use your side hustle income to pay down your debt, then it's helping you out. If you use it to just buy new toys, you know, cool, but it's not really helping you out. You just can't find another solution. So before you get upset and you say, it's bullshit that this doesn't count, try thinking of it from a bank's point of view. Anytime a bank lends money, they're assuming a certain amount of risk. Now, it's in their best interest to assume the least amount of risk while lending money, their money, to people. For this reason, you need to be able to verify the amount of money you earn. To put this in real estate investor terms, would you buy an apartment complex if the landlord had no way of proving how much money it brought in over the last few years? Or if it made any money at all? Now, hopefully not, but the same is true for the bank. They are investing in you, and you need to be able to prove that you are a safe bet for repaying the loan. That's the way it is, and you're not going to be able to change it. By the way, if you want an introduction to one of our recommended VA lenders or real estate agents, please go to FromMilitaryToMillionaire.com/VA-Realtor. I'll put the link in the description, and I'll gladly introduce you to the professionals who best fit your unique situation. We have a network all across the country. Now, what is the best thing you can do to help you qualify for a VA loan when exiting the military? The best thing you can do is get a solid job and show a competitive income. Focus on finding the solution to help you be more competitive for your loan, as opposed to focusing on the downside that you can't qualify right now. Also, do not commit mortgage fraud, and don't try to lie about any of this. It just simply isn't worth it. So hopefully this tough love video helped clear some things up for you, and I look forward to hearing about your success stories on that first or next purchase. If you got anything out of this video, I'd love it if you subscribed, smash the like button, or maybe just shared it with somebody else who will benefit from it. This is really a valuable video, I think, because I get asked this question all the time, and I know there are people looking for the answer to this. So hope you got something out of it. Have a great day.